This is London with VIP Trader and Bitcoin Spike. We're going to go over, guys, the market is open in New York. We're going to talk about Bitcoin. We like to trade Bitcoin due to liquidity and due to the volatility. Perfect combination for day traders. This is London, former hedge fund owner, private, non-SEC, not financial advice. We're going to dig into the details, and we're excited about the opportunity to speak with you this morning. Now, in terms of the price action, I'll wait a few seconds to let the crew roll in. Hope you guys are doing well. Just picture perfect. Very nice in terms of the price action that we had yesterday. We'll go over the example technically that I brought up yesterday in terms of an analogy. Looks like we're getting a pickup in the overall equities market, and this was a specific pattern. This is a specific pattern, for instance, on the NASDAQ. And we look at the NASDAQ, not to necessarily trade. We look at the NASDAQ for some direction, given the fact that it is the tech sector. I think you have to go to the 4-hourly. I believe on the 4-hourly, you're going to see a nice level of support, right? The U.S. tech sector. You guys got that right, okay? Within which I'd say crypto, it's kind of in the same family, right? In terms of the technical applications thereof, we welcome you to our channel. In terms of this specific pattern, we trade these patterns quite a bit. If you have a different pattern here that you're trading, no problem. There are two patterns. Take a look at this NASDAQ. We have that expansion on the level of support, level of resistance. That divergence is indicative of what we want in the markets. We'll go over the specific pattern in play on Bitcoin as well. In terms of the patterning, if you're unfamiliar with the pattern that's on your screen, it's because you probably haven't learned to identify increased volatility in the market. People will say, traders will say, I love price action. I just want price action. Well, unless something is trajecting, boom, through the stratosphere, right? Unless you've got a bull flag completing. There are only a few real good ones of those a year, right? As we would look at the details. And Venus, good morning. Good morning, Venus. We're talking about identifying volatility in the markets. It's not something, and Venus, you know this. It's not something which is what should we say? It's not it's not born into your hearts and minds, right? It's you don't grow. You don't just you're not born knowing how to identify volatility in the markets, but we hear it so much, don't we? We always hear, guys, continually we're going to hear, I want the price action. You guys know, I want the price action. I want to go where there's price action. But we're not willing, guys. Typically, I just say typical new traders aren't willing to go through the steps. As you look at the NASDAQ down into a level of support that we had projected here, and a little bit of lack of correlation that you see with Bitcoin and the equities today thus far. We'll talk about the increased volatility and the difficult pattern. A difficult pattern to trade. This was not light stepping. This was not, guys, as you were to look at this, the analogy that I brought up on Bitcoin, as you'll see on the bottom right. Now, both of these patterns look odd. They're not the number one pattern, symmetrical triangle. Believe it or not, like the number one pattern that people will remember in a book for day trading is a symmetrical triangle. It's easy. It's literally balanced. It's something which registers very easily in the minds of new traders. The symmetrical triangle, I'm going to remember that one. Much more so than, say, a confusing ascending or descending triangle. Which part is ascending? Which part is descending? The new traders will say. The rising wedge or the descending wedge? The traders get all those fumbled up, guys. Between ascending triangle, they think that's a rising wedge. A descending triangle, they think that's a descending wedge. So the number one pattern, as you look at the simplicity, for simplicity's sake, is going to be a symmetrical triangle. For a new trader. If you're a new trader, it's okay. Make sure that you understand the dynamics of a flat top resistance and an ascending triangle. Okay, ascending line of support. Okay, what stacks right on top of an ascending triangle? Well, both triangles are going to have what, guys? Both triangles. Pay attention real quickly. Just a quick review for everybody listening. The easy thing about triangles, well, we're going to trade a triangle. What are you going to have? You're going to have a parallel line. You're going to have a flat bottom support or a flat top resistance. If you say triangle, you're going to have, in terms of the ascending or descending, the descending will refer to the level of resistance. The ascending will refer to the level of support. So look for that flat bottom support. And I'm going to change these. Let's change the color of these so that they reflect accurately what we're typically looking at. It's just a good review. You may know this and say, hey, no problem. Great. What's the important fact that we're going over today? How to identify volatility in the market. When the rest of the market is looking for the reason as to why bulls and bears or who could be trading that. Okay, we're going to talk about what you see on the top of your screen. What is this? It's an increase in volatility on the NASDAQ. We identify the level of support, level of resistance we want to be a part of. Increased volatility in the market. So yes, as we were to look at, and let's just change this example on the top as we look at Bitcoin, actually on the bottom, on the bottom here with Bitcoin. And good morning to all of our VIP. I will say that. And you who are watching this, who are VIP somewhere else, get on with it. Go on back to your group. Go on back to your show. You go back to your place, huh? We are VIP. This is for VIP, okay? I'm telling you, go back, okay? I don't have to be nice to people who aren't in our group. That's not part of the contract with YouTube. I don't have to do that. I did sign not a contract, but I signed a creator agreement, so they project to us that they would like us to have members. I insist upon it. I love the idea, just in terms of some loyalty, in terms of some shout-outs and some stuff like that. And our VIP, I definitely respect them. So if you're a VIP with another group, and I do know you, I kind of know who you are, go. Adios. Ciao. Sayonara. Hasta luego. And don't let the door hit you on the way out. Now, in terms of the symmetrical triangulation, the symmetrical is going to be the combination, right? But this, as we talk about, how do you get to the volatility? How would you have seen this move to the upside? I mean, that was a nice hit to the upside. We're gonna talk about what you see on the top on the NASDAQ. We're going to talk about, and what is it? It's increasing volatility. And we're talking about Bitcoin in terms of VIP, our group, knowing it's like, ooh, London needs to be Mr. Popular. No, I need to run a good trade group with the VIP. That's the number one goal here. So not to be unfriendly to anyone who's new, but that's I do a lot for VIP in terms of reinforcing our group dynamics, reinforcing the safety of our group, reinforcing the quality and caliber of the people in our group. We sit back all day long. All day long we sit back and calculate ways to make money. All day long, we sit back and calculate ways to make money. Think I just want to go hand out flyers? Hey, here you go. You take that back to your group. Hey, you take that back to your group. I don't think so, guys. A lot of hard work in the mix. So in terms of flat top resistance, ascending line of support, just a review here. I'm going to turn the top one red. Why would I do that? Because typically your descending triangle is going to be the bearish one. Right? That's going to be the one with the flat bottom support. So in your mind, you need it etched that when you see the flat top resistance in the ascending line of support, right, you're going to be looking at that ascending line of support is what? That is why they call it an ascending triangle. You guys got that right. Just reinforcing this for you. Now, we're going to go over the dynamics here as we talk about capturing volatility, capturing the move yesterday, capturing, right, price action, right? Very important as you would look at this. Okay, and the patterns, this is one circumstance where the patterns are going to lead you in the right direction. They just are. If you know how to identify what's on the top in terms of the NASDAQ. This is a circumstance where the literal price action, the literal chart in and of itself is going to tell you, I see price action. I see volatility. I see an opportunity to trade. If you don't have volatility, you can't trade. Trade for one. You can trade 1 for 1 all day long, huh? Just here's a dollar. There's a dollar to you. Great, here's a dollar. Great, here's a dollar to you. You can trade, you won't make any money, right? You just won't. So unless you're running the exchange, you're charging a commission, right? So the increase in volatility. You may say, why is London stuck on these patterns? Well, we're going through the descending triangle. And again, on your triangles, make sure the following. And Flaz has just started his 100 rounds. So the big thing, when you see a flat bottom support, you pay attention because these are typically bearish patterns. You pay attention. Can they go to the upside? Sure. They could turn into a double bottom. They absolutely could turn into a double bottom. You have to watch them, right? In terms of, you could have a double bottom, boom, right to the upside. And I would want, or even an inverse, almost drew an inverse head and shoulder. But as you would look at this, sure, you could have a nice double bottom. Always something we pay attention to, but typically, and let's go through this as well. Typically, on a descending triangle, what do we pay attention to? We like to pick it up right in here. Boom, bam. All right, that's what we typically like to do. We see a flat bottom support. Traders who know what they're doing, they're measuring amplitude carry down, and we're stacked down in this area. Traders become very, very interested below any descending triangle. Bam, we want to roll it up. Now, ascending triangle is a flat top resistance, flat bottom support on the descending triangle, flat top resistance on the ascending triangle. If you see a flat bottom support or a flat top resistance, immediately see if you've got the consolidation necessary. See if you have the descending line of resistance, the ascending line of support. These are really the easiest patterns to master, right? They just are. And I'll tell you, the same as on a descending triangle, when traders who see this form are stacking orders, the amplitude carry down of the pattern, traders are stacking orders at this level to try and achieve a rebound, and boom, we'd call this a blackjack. We just call it a blackjack. Hang out in the back and you'll know why. We call them blackjacks, and they trade. Do they trade? We love our blackjacks. Now, double bottom, single pass through. Black, the double bottom, the 2-1, the double bottom, single pass through, boom. Blackjack, the 2-1. Ace deuce if you are speaking in code around people who don't know your trade tactics. The ace deuce, aka blackjack. And in terms of the details, so flat bottom support, we're paying attention. We're paying attention. Do we have a descending triangle? Flat top resistance, right? Ascending line of support. We're paying attention to that ascending triangle. Descending triangle, ascending triangle, both parts of a symmetrical triangle. You guys got that right. Together they make that symmetrical triangle. A symmetrical triangle, the #1 most recognized and easily retained pattern in the markets. Now, as you would schedule in for a possible blackjack below, pay attention, a specific descending triangulation. You want that double bottom single pass through, orders stacked below at that amplitude carry down. Yes, orders are stacked below for a potential rebound move at every, pay attention, at every descending triangle. In the same regard, pay attention to the same regard on a flat top resistance. Flip the script. Ascending a line of support, traders are looking for the possible power up and through and return, boom, to that prior level of flat top resistance. Capitulation through certainly can. We like to see the descending triangles launch to the upside after a capitulation. We like to see that move to the upside, okay? We just do. Trade. Get on your 15 seconds, your 30 seconds, your 5 second. Launch into those 100 rounds. And you guys let me know how that's going. Now, I bring these up because sometimes the fundamentals, we just don't pay enough attention to them in terms of the review of the patterns. We're not paying enough attention to descending triangle. I got it. Not just that you can identify it, but how do you trade it? Where's the sweet spot for a descending triangle? It would be about in this zone with any kind of an amplitude measurement down in a pickup zone. Okay? You may say, I don't like to trade them. They get catchy along the level of flat bottom support. I don't know when to tell that there's a specific candle that's been set below, or they seem to underperform. Yes, they do. They do seem to underperform. You got to check into your statistics on that, your probabilities on that. We have those calculated last 40 plus years in the markets. We have those. Bottom line, great access to data, guys. More than is on the shelf. Now, in terms of this, what we're going to talk about is the increase of volatility. Those are very well structured, very well recognized patterns. You guys know that. Yesterday, I brought up the following. I brought up the example And I put a GIF in the back. GIF in the back, and shout out to Venus. Great trades, great trades. Venus had an excellent pickup in this area here. We're going to switch to the, I believe, the 30-minute time frame. Now, the 30-minute time frame had a nice secondary level of expansion. What I'm looking for on increasing volatility is, ideally, I want a descending, please pay attention, I want a descending line of resistance. I will hunt a time frame. I will hunt through a time frame, guys, a litany of time frames to try and get to the specific descending line of resistance. That's my goal, descending line of resistance. I don't want a flat resistance. My odds increase. Pay attention closely if you can. My odds increase. Taking a look at the NASDAQ on the top side, my odds increase of making money directionally. My odds increase of making money directionally if I can establish on a time frame a decreasing level of resistance, a descending level of resistance. Okay, yes. My odds are better if I have a descending line of resistance and expanding there from a descending line of support. I want an expansion. I want increasing volatility, and my odds of making money go up. So the first requirement, as we look at this on the 30-minute, yesterday's move, and I'm explaining this so you can recreate it and have expectations in line with, you say, hey, I found a decreasing level of resistance. That's step one. Then I found a specific level of support that is expanding therewith. Pay attention, okay? I need this expansion to be descending. I need the level of volatility. Let's get into what we got into yesterday. And the gift that I gave, to finish that thought, the gift that I gave Venus in the back, she had a great pickup and a wonderful trade from this sub-included pattern, right, on the exterior of, or you could call it an external pattern, below the level of support, right, was of a quarterback with a hot hand throwing the football in line with yesterday's analogy that I provided you guys. Yes, what was the analogy? We happen to be on a crowded football field. Exactly. I want you to go run. I got the ball. I want you to go run. Go run 60. I can hit you at 62 yards in the air. Come on, guy. You run it. Clear day on the football field. No other patterns in the way. Beautiful. You run. I'm going to hit you at 62 to 65, maybe. The arm, 65. In the day, sure. But 62, I probably still got you at 62. You and me on the football field all day long. No other traffic, no other kids on field day, no other it's Saturday sports day and every mom, pop, and dog is on the field. We don't want the traffic. We don't want the congestion on the football field. So this was a congestion on the football field. We were in a pattern back up into a pre-existing structure, a level of support, flat top resistance, that ascending triangulation. What did we do here? What is this? This is called a pullback, boom, to prior support. A pullback to prior support. Do you know what a pullback is? You have to know what a pullback is. Do you know what a throwback is? You have to know what a throwback is. It helps if you know a pullback versus a throwback. A pullback to prior support. You guys got it? A pullback to prior support. High percentage, right? Not a lock, not a guarantee. A throwback, boom. A throwback up and over a throwback to prior resistance. So, if you're heading back down in the market, pay attention. If you're heading back down in the market, it's going to be a throwback. If you're heading back up, it's going to be a pullback. So a throwback to the downside, a pullback to the upside. Just terminology. just so that you can, I'm going to say that so that you can more accurately understand the advanced data sets that are going to help you make money. Help you make money, hurt you make money if you don't pay attention and utilize them the right way. That's where you are your best or worst enemy. I'm going to tell you guys that. Yesterday, we talked about that congested football field, that home run, right, that we were looking for, and the congestion here was that prior pattern. So we did pull back to the specific level of prior support. And what was a key feature? This was worth noting. Depending upon the time frame, we talked about the expectations of a full and complete. And let's get to where we're at. Let's get back to where we were. In terms of the expectations of the ascending triangle, in terms of measurement, and I get a little conservative with these, I'll just go ahead and bring this out here. In terms of the amplitude to the upside, the amplitude to the downside, what are we looking at? The maximum probabilities, as we stated yesterday, is going to be a completion as to the upside or the downside, to that 50% level. So much of the market is continually looking, and it's so painful if you're trading it. I've seen it, guys, bad fallout. So many traders get interrupted at the 50% completion. And how do you get those? Your Fibonacci trend-based extensions. I'm going to click 1, 2, and 3. Now, if I want my fractional completions on a trend-based Fibonacci extension, if I want fractional completion to the upside, to show targets to the upside versus the downside. If I want the completion targets to the upside, I'm going to start drawing to the upside. If I want to project my targets to the upside, I want to start drawing to the upside. If I want my targets to the downside, using the trend-based Fibonacci extensions, I'm going to start drawing to the downside. Okay? So if I want my targets down here to the downside, I'm going to take my trend-based Fibonacci extensions. I'm going to click 1, click 2. Why'd I click 1 on top and click 2? Because I want my targets to the downside. Right? I want these targets to show up to the downside. Boom. Why did I bring it over here? It's right in line with that breakout. So I established the amplitude to the downside, which I'm going to bring over. It's just a ruler. It's an automated digital ruler. I want to take this amplitude and I want to, bam, know where that 100% is. You see? Now, if I want my targets to the upside, what am I going to do? I'm going to start drawing up with the tool. Click 1, click 2 is going to be up if I want my targets up. Okay? If I want my targets down, to the downside, like I just drew here, to show that 50%, the highest probability percentage completion for this pattern, I'm going to click 1, click 2, and we're going to go down. Start drawing down. Click 1, click 2, and I'll get my targets up, right? So here, click 1, click 2, same amplitude measured, but now watch, boom, now I get my targets to the upside. So think of that directionally. When you start using this tool, it can be confusing otherwise. If you want your targets to the upside, start drawing, click 1, click 2 to the upside. If you want your targets to the downside, start drawing, click 1, click 2 to the downside. Okay? Just a trick, okay? Just to help you use that tool. Now, if we were completing this ascending triangle to the upside, yes, if we were completing this to the upside, well, it's the amplitude measurement, carry up, everyone knows that. Right, okay, so let's do the 100%, huh? Now, we know that the probability of hitting the 50%, that's the sweet spot. That is the sweet spot, the 50% to the downside as well. The 50% is the sweet spot for completion. So you can take your amplitude measurement and you cannot be operating in that max, guys, that max gain zone, right? That max probability zone. Pay attention, the fractional completion, the fractional probabilities mean, well, sure, we've got an expectation of going to the downside, the full amplitude, or to the upside on our ascending triangle. The flat top resistance, ascending triangle, ascending line of support. Buyers stepping into the equation. Buyers failing. Right? So there is a downside target here, and we talked about that. However, as you look at the probability fractional completions, you're going to have a higher percentage participating to that level of 50%. Yes, so when we get to that level of 50%, what do we start looking at? And this is beautiful, in line with yesterday's conversation. When we get to that 50%, we start looking at what? Well, are we tired out, right? Is the move going to reverse? What do I see that could be in the favor of a reversal at this level? You guys got it. And what was it? Slightly descending line of resistance. This specific level of support expanding there with. I liked the 30-minute on that specific chart. Let's go to the 30 minutes, fine. Let's go to the 5 and see where the 5 was. Close to and I was going to tell you, I make a distinction in terms of this level of resistance being flat or not. And I am aggressive on making this flat top resistance. I want it descending. I want it descending. Okay, capiche? You guys know that. It's just the bottom line. I want it descending, and I want expanding there with a level of support. You give me those, guys. If the market gives those to us all day long, I'll tell you, you're paying attention. Okay, if you're seeing them and you're trading them, you're probably doing well. You know that. And what do they require? What do these require? 72% to the upside. At some point, right? At some point, what do they require for you to engage in capital management skills? Bottom line, okay? And they'll continue to surprise you. For those paying attention, they'll continue to surprise you. They just will. My difficult role here is what? Is not telling you, hey, 75% of the time you're going to like almost double your money. Because what is the guy who wants to take his account from 5,000 to 50,000, or from 50,000 to 250,000, or from 250,000 to 2 million? What does that guy do? When I tell him you're in a pattern, you have a 70% chance of doubling your money. What is he going to do? Well, he's got to double his account. He's got to triple his account. Wrong side of the fence, guy. That's not VIP. I'm going to tell you, consistent trades at a similar level, right? Consistency wins the game here with the markets. I'm going to tell you guys, consistent amounts of margin. The ones who hear that do so well. They do so well. The ones who don't, ouch, ouch. The whole world suffers. The wife, the kids, everybody. I see it, guys. I see it. They got to play heavy-handed. The whole world suffers. The friends, the wife, the kids, everything, especially them. It's miserable. Watching people overexposed in the market. So looking at this original expansion here, that volatility level of resistance, level of support, that expansion, it's like, well, hey, this one failed. Look at that level of resistance come back and boom, up and over. Now this here, if you trade, and I tell you all to please trade, and the traders that I care about, and that would be you guys, the traders that I talk to frequently. And you can say, well, that was a big surprise. Well, that one, not so much. This one, not so much. It was a nice secondary pattern to trade off into. And I'll say from that specific pullback move, it's at least calculated. It's a calculated move by the market to return to prior support to resistance, the flip. So you dig in, right? You dig in at that 50% completion to start looking for any opportunity for a reversal, right? Can I get into a 70 to 80% zone where I'm in a 70 to 80% likelihood of at least becoming directional, or at least maximizing my participation within that 70 to 80% zone? Man, if you can stay in an 70 to 80% zone all day long in your trading, are you kidding me? Honestly, those are the traders, I'm going to tell you, I promise you, those are the traders that everyone else looks at and be like, wow, they make it look easy. I wish I could do that. I'm telling you, if you can stay between 70 and 80%, I'm telling you, you know this as a fact. Those are the traders that everyone's like, man, I wish I could. I wish I could book 7 or 8 out of 10 trades. Whew. I wish, I really, that would be my dream, right? It is what it is. So as we look at the notion here of a surprise upset, right? So some people immediately stars the limit, and yes, it's the impulse wave. It is just the impulse wave, right? It's the blue light special at Kmart. Everybody looks over the blue light. Old time, long ago. I think they all went out of business. It's like I can't make a good analogy. It's like the halftime show, huh? Maybe at the Super Bowl. I don't know. Who knows what it is? It's you're magnetized to the move, right? And while you're magnetized to the move, and all of I'll tell you, it's very highly psychological. For the VIP who've been VIP for a while, you've watched some of the high-level psychology details and neurochemistry and overall biological studies that are done on traders. Yes, neurochemistry, biological, overall systems, biological, experiments that have been run to work on traders, you're getting worked on. I'm telling you, it might as well be some sort of a daily surgery you almost have to go through. Literally, it's the top minds in the field in terms of what does price action do to the traders? Increase cortisol, right? Fight or flight, literal generation, literally ready and put in mode of fight or flight depending upon what you're shown on the screen. At the highest levels, these moves have been calculated. Your goal is to unwind, and understand the basic principles in play. You will do so much better with a throwback to prior support. Okay, what was nice on this? The 30-minute time frame. We talked about that yesterday. We talked about the completion of the 50% being somewhat preferred, at least as a hypothetical. So looking at the 30-minute time frame, this pattern has played perfectly. Noted. We note such. The 30-minute has been friend. I always say it can be friend or foe, right? Now, in terms of the details, let me get a text out quickly. And good morning to all the VIP. Hope you guys are doing well. And let's see what we have. So let's talk about the expectations in play, the volatility that we're trying to capture. Let's discuss as the NASDAQ is pulling back a bit. No worries. But identifying, as we were to discuss, and I need to go back and finish a comment here before, let me look into this. Hold on. Okay, right here. Now, as we were to look at this specific, independent of the ascending triangulation, and guys, I have to say this, for you who are paying attention, there's a reason you're paying attention. And I like it. It's good. Because you're paying attention because you understand that there's some money to be made. It's a different kind of money. I'm going to say that in terms of your participation, and it's one of the things I appreciate, just so that you know, okay? Because you can go find your baby Shinu XRP and make $1 million. Your baby Shinu, XRP jacked. It's like, oh wow, you made $1 million on baby Shinu, XRP jacked. Oh wow, huh? That's good, huh? Take that to the dinner table with the entire family on Thanksgiving. Congratulations, we're really proud of you. Now, guys, you don't want the baby Shinu, baby XRP Shinu, jacked. Like, what did they come up with? You made $1 million on that? Great. Then how many you did? Wow. So I bring this up for the following reason. Because you're interested in the price action, and you've seen enough in the back. You've seen enough of these in the back where I could tell you to run for the hills. There's a forest fire, run for the hills. There's a forest fire. You're like, I'm going in. It's an expansion. I'm going in, right? You've seen the probabilities work out enough. This is a hot zone. Anytime you get up and over, just pay attention. I tell you to trade 200 of these, trade 300, 400, 500 of these patterns. In terms of the expansion here, trade a multitude, a high volume of these, and you will see that this is a hot zone. You guys know that. I don't like that, but so many times we see this first real breakout along the way. You see it just push, boom, bust to the downside. We see it frequently. Here we had a bit of a heads up in the back just to go through the patterns that we had in play. we had the rising wedge, didn't we? And I'll have to find the time frame. You guys have that in the back. The rising wedge was a feature that traders were struggling with and kept up for a while. I think they were kept up quite late on this one. We had ourselves a bit of a rising wedge into this zone. I'll have to find the time frame. You guys have that in the back, right? I know that you do. Something along those lines, right? There we go. And so the rising wedge constriction, we were hoping for a overplay there. What did we run into at the top? You guys will, I don't want to dig through the Twitter right now to look back through the specific time frame. You guys can help me out if you'd like to. If not, don't worry about it. Looking at this here, what did you have? And you may say, man, enough with all this. Enough with all this. I got to tell you, enough. Enough with all this expansion, this, what is it? Price action. Enough with all that price action, huh? I'm going to go make money with Baby Shiba Inu XRP. All right, well, that's not VIP. That's not what we're known for. It is not what we're known for. We're known for identifying price action, volatility, a level of support, a level of resistance, and maximizing our odds, our participation in the market. Okay? So what these patterns will require, and what's the big kahuna here? What's the big granddaddy that we're looking at here in terms of like, well, you know, these trivial details, I can't be bothered with them. What's the macro? Would be the, you know, the little voice running in your head. It's a little too complicated for me, right? The trader shows up and I'm kind of, you know, I need to know. I mean, your time, someone, not yours, but you guys know the traders that show up and like, you know, I need to know the answer. Oh, okay. Such and such has showed up to the market. He needs to know the answer. He needs to you know, he's got plans to buy a $2 million house. Oh, okay. And he has plans to buy a Maserati and a Ferrari. I see. Well, you know, he's shown up. Everyone needs to provide him the right answer, please. No ability to synthesize information, empirical or otherwise. No willingness to dig into and identify some of the complex patterns, really still basic, but how they work together that really can be rewarding in the market, right? So, and very little discipline to do the following. Very little discipline to do the following. Look at this. This becomes beautiful. If you know what you're doing, what I'm doing right now, what am I working off of? Pay attention, VIP. What am I doing? I'm taking the entire lot of volatility thus far. I am literally expanding on through, and again, that King Kong, the granddaddy here, is the ascending triangulation, just playing off the ascending triangulation, right? Also, very easily put, it's like pick up at a prior existing pivot, very easily put, no problem. But what the most important thing to me is, I want to, due to the probabilities involved, due to the probabilities of breaking said line of resistance, I want to identify opportunities to wham. I want to participate with price action with increased volatility. That's the name of the game. I want increased volatility. Okay, so you may say, now let's look at this, guys. You may say, well, I want, I want ascending triangles. Okay, and what are you doing? You're constricting. All right, you're constricting. So you're going to get excited about one breakout moment here. Great. You may get excited about descending triangles. Okay, what do? Constricting. All right. And yes, you have your launch moments. Potential here for a throwback. You may have your breakout moment here. Potential for you guys got it, for a pullback, right? You may say, well, I like my descending wedges. And I just threw one of these up in the back so that you guys would have the descending wedge framework. What are you doing? Constricting. You're constricting. You're constricting. You're constricting. Right? What are you doing here? What do you have the opportunity to do here? To still be directional. To still be directional. And this is the clincher here. You still get to be directional. While, and I mean directional, okay, directional, after or as a part of increasing volatility. This story gets better the further down you go on this line. Are you constricting? No. What does your equation look like here? Ascending triangle, right? What does your equation look like here? Descending triangle. What does your equation look like here? Yeah. Your equation here is, okay, I want expansion. Yeah. Directional increase in price action. Beautiful. Now, I'll take a bull flag that wants to rip through the ceiling, guys, that wants to rip the tiles off the ceiling, the crown molding and everything, and take the roof off. You know that. How many of those we get? A couple good ones on the macro a year. Right? So when we look at that component in terms of the increase, we can look at the daily, right? What we really like on the daily, really, can we get the same thing? Can we get some boom? And I bring that up just a touch because let's look at the daily on the NASDAQ. Let's look at this on the daily. Go to the S&P, go to the Dow. Go, and if you want to, isn't it interesting right now that traders still want to cherry pick? They still want to cherry pick, and they still want to trade their favorite patterns. It's just funny. You guys know this. It's just funny, right? Now, we can put this in the context of the descending triangle. Again, that double bottom playing to the upside. Very nice. Okay. But what is this? What is this? This NASDAQ, this U.S. tech sector. You know, what is it? What is this? What is this? You know, while the entirety of the lazy kind of the lazy show wants to get together with day trading and define which patterns they're going to trade. All right, what's that? Huh. I see. Okay, so that is a descending level of, let's just pay attention to this on the NASDAQ, level of resistance expanding there with a level of support, right? Breakout was what? Was contemplated. And the notion that you would start to do something like this in line with, that would push as well as you're looking back at a confirmation at that level, but as you would start to do something like this, what is this giving you? It's giving you levels of capital exposure. Arguably, you tell me, it's giving you arguable levels of capital exposure. If you have an expectation of hitting through this top line resistance, absolutely. Again, I always say, and pay attention, let's look at the S&P. There we go. Now, where are the droves of day traders that are going to sit and define on the macro on the S&P 500? They're going to sit and tell you which patterns they want to trade. They've shown up to the market. They need to be accommodated. I'm telling you, their opinions, and they've decided to get in market. You know, they've decided to put their good hard-earned money into their trades. They don't know what this pattern is. They don't want to pay attention to it. I'm going to tell you guys, you better listen to them. I mean, you just better listen to them, right? The S&P 500 looks like this. It looks like this on the entirety of the retrace. Tune in Tokyo, like Houston, mission critical. We are starbound. We are starboard. Like, guys, the last 415 days have encapsulated this specific pattern on the S&P 500. Oh, but we get bored when we talk about it. I need to go back over to something more exciting. Oh, well, that's good. That person's going to lose. The person's going to lose. Watch them. If they don't, write me. Write me and say, hey, London, you were wrong. All those guys won. They never learned how to trade this pattern. You mean the pattern that the macro of every major U.S. index is in? They never learned how to trade it. I see. And they couldn't identify it, and they ignored it. Doubtful. So that's the S&P. Looking at the Dow Jones. What's the Dow Jones? Well, Dow Jones, what do we have? Same story. Literal same story. Okay? So you can sit here and say, you know, I guess that, you know, you could make a decision that your day needs to be filled with other patterns and mastering other patterns other than what the entirety of the U.S. indexes are showing you over the last year plus. I'm going to argue that you're not going to do well in the markets unless you learn how to absolutely annihilate this pattern. If this pattern's being shown to you on the macro as it is on the Dow Jones, NASDAQ, S&P, I'm going to argue that you should go and trade 100 of these patterns on lower time frames. Develop some understanding of what's going on here, particularly if you have real cash involved, and you want to be a real success in the market. Man, get some authority under your belt in terms of experience. from me to you, heartfelt, from me to you, take the Dow Jones patterning, take the NASDAQ patterning, take the S&P 500 patterning. Compare it to the Bitcoin patterning. Compare it. What's the difference? Where's the answer? Looks like we've underperformed. Do you need to go to the logarithmic chart? Should you? When should you go to the logarithmic chart? Why is there a conformance with Bitcoin on the logarithmic chart, but man, you just aren't on the regular charts with the regular indices? Why is that? Do you know when you're supposed to use the logarithmic chart? Does that matter to you at all? I know it does. I know that you're paying attention, and I know that you want these right answers. The reason that I focus on these patterns is because in this group, I promise you this, and I get letters all the time of people who used to be, or this or that, or wanted to be, or whatever. Sad song in our group is that you're not in our group anymore. You break the rules, you're gone. You fail to respect me or anyone else in the group, you're gone. Try it for 1 second. Not me, I'm not the high guy on the horse. Try disrespecting any individual in our group. You are gone. I am telling you quicker than you can say, you're gone. You are gone. That's it. We have standards. We love our standards. That's part of being in a group, guys. We're not going to get through this retrace in the market without being just wrapped around strategy-wise, head to tail on this pattern from the Dow Jones to the NASDAQ to the S&P to, hold on, you mean on Bitcoin you have to go to the logarithmic chart? Yeah, well, hold on. On Bitcoin I have to go on the logarithmic chart. Why? You guys look for an answer. Dig in your book for a minute. Know when you're supposed to use a logarithmic chart or otherwise. Just try it. Dig a little bit. And yes, on Bitcoin needs a slight level of accommodation. And is it pretty here? Not really. Not really pretty here, right? Is there anything else other than logarithmic we'd want to look at? We'll stick with logarithmic for now, okay? Any subsets you would want to consider here? I would. Let's go on the regular chart for Bitcoin. Let's go regular. Let's pull out our specific patterning here. Now, if you trade enough of these, you're going to have a good understanding as to whether or not this subset level of resistance here, okay, is going to want to traject up and over that level of resistance. Just trade 50 of them. Trade 100 of them. And yes, I mean trade 50 of these that you see on the Dow. Trade 50 of the NASDAQ. Trade, in terms of the patterning, trade 50 that you see on the S&P. Well, how are you going to get 50 patterns? Go on the 10-second time frame. Literally throw $1 at every one of these you see and trade it. Only $1. Throw a literal quarter at it. If you want the experience, I would just argue you need some type of financial involvement in it. Something, if you care about a quarter. A lot of you do. It's a human nature. You'll wind up in the grocery store and it's like, the gum is 64 cents. It's like, hold on, you just charged me $1.02. It says 64 cents right here. You'll get into it with the guy at the gas station. It's just human nature. You will. Find yourself sometimes it's like, man, I'm sitting here, goes through your head, I'm sitting here arguing about 44 cents. It's like, I'm just going to let this go. I'm going to let it go. But it's not easy, right? Give yourself something, some skin in the game. But dig into go to the 15-second. Get in the lower time frames. Get the experience under your belt on these patterns. Just go for it, right? Let's see what we got here. In terms of the identification, when can you get in with the lower, let's say the lower set? Let's do this. right? Can you bootstrap in, like on these patterns? Now you don't want to exclude the other patterns as we look at the framework here. And I'm just telling you guys directional and in terms of volatility and in terms of what's going to it's on the macro of everything. It is the macro of everything. And it's so underutilized in terms of the benefit it can bring to traders. We are going to focus on it gladly. Imagine just saying, I don't want to focus on the macro of NASDAQ. I don't want to focus on the macro of the S&P or the macro of the Dow. I mean, I'm here to beat the market. Whoa, nice. Come on. Yeah. Now, we don't want to exclude the other patterns in play. Never. You guys know that. But if I can find 72% to 75% to 80 to 85%, if I can find that in the market, you're going to find me literally breaking down like walls to get there. It's like, put them up. I've got my gloves on. I'm going to break through this wall. Boom. I found another 72%. Yes. I found another 85%. Yes. You're going to find me. That's the way I want to beat the market. If you show me, guys, and if you present me with the opportunity to engage in for profit at higher percentages, put up the brick wall. You will find me. Put the gloves on. Through another wall, we found another. Hey, where are the walls? What are the walls? Right? How many of these have you traded where you've strapped back into with a level of divergence here? Where are the walls? Right? Where are the limits as you trade? And for those of you who have traded, I have to shout out Venus. I know Venus has gone through 100 rounds multiple times. You all see her trades. You all see everything. There's a reason. And Venus and I have incredible talks. Wonderful to be building with you, Venus. And Venus and I connect. You'd be like, well, they're building together. Venus understands. I sit down with Venus and I'm like, you can book 4 positive trades. And she just says, yes. She engaged in 100 rounds, and yeah, it's a dynamic feeling to wake up in the morning. It's a wonderful feeling to wake up in the morning and know you can go book 4 or 5 or 10 positive trades anytime you want to. Man, this stuff's easy. This stuff's easy. Let's have a cup of coffee. I want to trade. Different kind of I want to trade, not cocky, just boom, emboldened, understanding your skill set. You've earned the right to push the button. The buttons know you by now. Your profile. What's your trade profile? Are you the guy that shows up with paper trades? You're the guy that shows up with a $5,000 account or a $50,000 or $500,000 or a $5 million account every 2 months, 6 months, 12 months, 1 year, 2 year, and you always blow it. Are you that guy? Do you know how to trade? Because the market will take your $2, your $2,000, your $2 million, your $200 million, or the 20 that I left out, the 20 million. It'll take all of it. It'll take the 2 billion, 20 billion. It cares not if you know how to trade, okay? I just bring that up and not to harp on anything other than just being excited, Venus, that you. It doesn't surprise me at all. Like you from the get-go, Venus and I decided to build. What was easy about that? Did you guys see the number of trades she was doing? The girl was on vacation in Turkey, right? In like a beautiful spot, and she's just hammering through trades. I'm like, that girl, you got to watch that girl. She got something special going on. And certainly, it's just great to see what 100 rounds can do. It's just market participation. So we prefer to not have to bulldoze through pre-existing price action. But you start to get the notion here that, and you'll start to look through, if we have to bulldoze through prior action to get into a solid framework, is there, we're on the 15 second, what on the different time frames would I be looking at? And you may start with something, you may disappear, okay? You may start with something disappeared, or you may get, you may find your levels, certainly. Right, as we were to look at, and guys, don't worry about the descending, ascending triangle. It's right there. Boom, you got that all day long. You've got your, I'm just putting this into the max probabilities for you guys. And along there with, let's see, along there with our Fire and Ice is doing well, doing very well. What picked up yesterday? Yeah. The 8 hourly nicely. What made money? The 4 hourly. You guys, it made money nicely. Just look at the expansion. I always want to participate down here. I just do. Especially if I can get directional with it, and I expect to break the line of resistance. And you guys know that. I know you guys know that. But we're going through this because not all the VIP have traded 100 of these yet. And if you haven't, you're missing out. So I like that. What is it? Slightly descending level of resistance and expanding there with level of support. Oh, yeah. Now, what does this mean, right? Well, it means in terms of a diagnostic that I'm going to play, I'm going to be prepared. And sometimes in the back, I'll do this. And good morning. Hope you're all doing well. Always going to look for increased volatility. Like, hold on. I know. Hold on. I see something different. Really. We all do, guys. We all see patterns that potentially, guys, are in play or actually in play. And what's the scenario? Well, the patterns that we're seeing in play typically have a lower probability of success, lower probability in terms of being directional. And these can be brutal, these expansions. Now, what you're seeing here is nice, right? What you're seeing here is very nice. You're seeing a constriction with an expansion dynamic. 28% of these are going to fail. 28% of these are going to fail. Okay? But you're seeing a constriction with the notion inset expansion. Expect to see such. Let's go back to the 4 hourly. You guys know how many times we were presented with a constriction to an expansion. I'm talking about within the last 100, 200 days, a constriction within an expansion. Let's say a constriction with an accompanying expansion. I'm not going to detail out all of these. You guys know modus operandi, big time, like a bow tie. I call these bow ties, okay? Just because it's got and just understand, you've got the notion of a constriction and an expansion accompanied. You guys know we literally can pepper up bow ties throughout the entirety of this. Constriction to expansion. Go on the candle wicks versus the actual lines. Go on the actual, you'll find them, guys. You see the constrictions? You guys go and do the expansions. Practice up, okay? Constriction. There's a constriction. This is the entirety of the price action of Bitcoin in the last 120 days. Okay? On the macro. Boom, boom, boom. And now we need to find the expansions. Now we're going to find the expansions. Boom, boom, boom. There we go. You can inset, go to your candle wicks, go to et ceteras. We're not going to do this fine tooth. This doesn't need to be a Rembrandt. It is literally to show you what we have talked about for months on end with Bitcoin. You guys know that? Months on end with Bitcoin. Yes. Constrictions, descending wedges to expansions. When you trade a lot, you remember the pattern behavior. That's why I don't encourage people to jump into a different asset and immediately start running their cash into it, right? Make sure you understand how Bitcoin or anything wants to behave. So when we see this constriction, pay attention. When we see the constriction near flat bottom support, but let's go into the 5 minute. Yeah, flat bottom, troublesome, again on those triangulations. Flat bottom on that 5 minute. So we hunted a bit for a descending. I may have to unwind. Let's rewind all the way and see which time frame we were on. Hope you guys are having a great morning. Always a pleasure to be with you in the mornings. New York Open started with a bit of power and sizzling down. It's like the oil in the frying pan has slowly stopped popping, right? We are almost flat. Started with a nice push to the upside, without a doubt. And looking at that flat bottom support, as you look at your differentials, just understand the complexity involved. And as we talk about like eagle eye, and I thought about this, you guys, I thought about this. As you guys know, and let's go through this real quickly. As you talk about like eagle eye, what's eagle eye? Well, that's the idea that you would want to be you have your satellite imagery up and boom, be able to focus in on any time frames that you want. Pull back, information processed, different time frames. Be able to balance where is your advantage amongst the time frames. Is there kind of a greater weight to the time frames? Yeah. Is there a unique advantage in the time frames? 30-minute yesterday. Friend or foe? She wound up being friend. Is there that 70 to 75 to 85% that you can find in one of the time frames that you really had to eagle eye into? And eagle eye starting big picture. Starting big picture, starting large time frames. Yes, indeed. And going down to your lower time frame, picking up the information. Will you utilize it, or is it just is it useless? Another time frame, patterns, looking at your patterns, looking at your divergences, right? Is it useful? All right, throw it away. Eagle eye, starting big picture, going down to the lower time frames. And I thought about this in terms of that approach. Your understanding, your patterns in play on the macro are the following. And it's very important as you were to look at this and understand the concept. Just let's take the state of Florida. You guys know Florida, you know, like Disneyland and Miami and Tampa and all that good stuff out there, right? As we were to look at like Florida, and I'll probably make a mess of this, but it's a great example. Where's the brush stroke? Here, boom. As you were to look at Florida, let's just say Florida goes down like this. Let's say something along the lines, you got something over here like Texas, however Texas wants to be. You've got a coastline out like this, almost like an inverted head and shoulders. Let's just draw an inverted head and shoulders for Florida. Let's just draw a kind of a V pattern shape for the east coast of the U.S. Okay, as you were to look at this, Florida, what becomes relevant as you're in Florida? What becomes relevant is that you can zoom in all the way. If you're in Miami or Tampa, you could get down into it. And what do you have to keep in mind? If you're, let's say, driving around in Florida, it's a peninsula, right? So you're only going to be able to turn this direction so many times. You can go in, I guess you can keep going up if you want to keep turning this direction, you know. If you're down into the mere geography of where you are at, and it's very relevant. Imagine Australia. We have traders in Australia. You can sit there, we're going that way. You can convince a legion of people that are not paying attention to which guys you know in Australia. It's like, we're just going that way. At some point that way, from Sydney, et cetera, it's like, whoa, we have a problem. We run into a water issue, right? Same with Florida. You can scope into your Tampa, or you can scope into your Miami, or let's say your Miami, or your Orlando. You could scope into your Destin. You could scope into wherever you'd like to participate. But at some point, you can't go further this direction, right? So within the limitations of just basic geographical concerns, right? You got people in the markets that are in Hawaii that are talking about, you know, a nice old walk down to New York. The example is there. The framework, the mental framework is set. As you look at eagle eye, as you look at your larger macro parameters, understand when we are pulling in levels of support, we're defining characteristics in terms of patterning. Boom, boom. Right? Sometimes, I'm going to say sometimes, market's been real finicky, right? But sometimes you're going to discover that, well, there's the northern border to Florida. It just is, right? And sometimes the market will say, surprise, you're not in Florida. Surprise, we're not in Florida. We got a new geographical setting to present to you this morning. The market will do that. Oh, you had all the maps on Google and everything else. Well, that road actually doesn't exist. We've had this on, it's funny, huh? It's funny. Google even, yeah, you guys know it. That road actually doesn't exist yet, okay? But when you're framed into the macros, you can think about it in terms of geography if you're a new trader, and I think it's going to help even a seasoned trader. It becomes highly relevant. You look at this and it's like you understand due to the geography here in terms of the patterning. It's like, no, we've got all this down into here. We've got all this. Really, if we wanted to, we'd have all this as well here, right? where are your limitations, your rational limitations in terms of the expectations of the market, et cetera. And from the concrete land to water barriers, we start to work in with really a bit of a gray area in terms of the probabilities. It's like, what's the percentage probability that we can get to the next level? What's the percentage based upon the last 40 years of market information, right? That the specific pattern here is going to allow us, in spite of it being a rising wedge accompanied with an inverse head and shoulders, what's the percentage probability that we're going to just going to launch, right? With the deep X presented, on what we would have, and we got through this yesterday, you guys know, with the flat top resistance, yes, flat top resistance, descending line of support. You know, as we were to really look at, digest, synthesize, and put it into, in terms of like just mission critical information here, looking at this framework, this is just bothering the market right now. It's bothering me. It should be bothering you, because this is Bitcoin on the macro. This is on the macro of Bitcoin. I'm on the 8-hourly time frame. Man, I like the support resistance, the support. Man, what is up with all this white space right in here? It's just blank white space is what we would call this. Really, to be conformant, we want support, resistance, and then a partial return, and bam, up and out. So if this is annoying you, just Bitcoin needs a little bit of accommodation right now. Just does, without a doubt. So it's not ideal. What was ideal? When you're frustrated by the lack of ideal circumstances, try and look at, okay, what is ideal? What is ideal is that 200 weekly. Boom, on your right-hand side. Let's take a look at that 200 weekly ideal. 200 weekly moving average. Boom, 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 boom. Do you think that shorts are? And this is the way it gets, huh? It's shorted 1, 2, 3, 4, 5, 6, probably 7, 8. I think Vinny's hit it 8 times. Yeah. When that happens that many times, now everyone's convinced, right? The first takers were rewarded, right? They invited you to the dinner party, and you showed up, and the guest was like, well, thank gosh you showed up to the dinner party. You get whatever seat you want in the house. Party's yours. Now everybody, ooh, look at all the fun that everybody's having over there. You guys got it right. Huh? It's like the party has already happened. And the problem is, now is when that diligent brand new trader, who's, you guys know, but it's just a joke. Now the diligent brand new trader is going to show up and be like, look at this. I've identified a set of behavior here. Yeah, other people have already minted. I like the analogy. You were invited to the dinner party, you showed up, and the host said, you can sit wherever you want. You don't know. Do you know on the analogy? Where's the party? Well, it's the 200 weekly. You show up, and I'm going to sit wherever I want. I decide I'm going to go short. No problem, says the host. Excuse me? Hold on. Let me check that with my book. Hold on. Is that the book? Is that a New York Institute of Finance? Well, you see, there's a dinner party. Listen up a little bit. Just curious what your thoughts are on this. There's a dinner party. We're going to invite some people, and we're so happy that you showed up at the dinner party, the 200 weekly. Well, you can sit wherever you want. Well, that's great. I'd like to trade, and I'd like to be short. No problem, says the host. No problem, says the host. No problem. Enjoy yourself at the party. Well, what if you would have, well, we're just excited that you decided to come to the party. Very interesting thoughts. I would recommend that you look at the overall entirety of your indicators, look at the overall entirety before we would ever expect some individualized treatment from the hosts of the party, right? Very interesting right now. I'm going to tell you guys, I got some opinions. Just a few opinions. What is this guy, George Soros, huh? Oh, great, George Soros. Who is this guy, George Soros, huh? Hold on. Isn't he like one of the best traders in the world? No, he's spooky and he's evil. All right. You go with the spooky evil part. You go dine and dance your way around that next dinner party and talk about George Soros being the source of all whatever you've read, or I don't know, maybe the CIA's, maybe there's a conspiracy tape on him. I don't care because he trades. I want to look at his trades and not be affected by the fact that he's got a political affiliation, a sponsorship, and I don't care. You know, I don't like that player because he's got a Nike sponsorship. Do what? Have you seen the brother play on the football field? Look at his hands. I know, but I like Adidas, man. I like Adidas. I ain't going to be supporting no guy that's got a Nike sponsorship. He's the best player in the world, man. Is Soros the best trader in the world? Do I care if he's got a Nike sponsorship instead of him having an Adidas sponsorship or a FIFA contract? I don't care. He's the Pele. He's the Pele. Why? He made $1 billion shorting the British pound. He made $1 billion shorting the British pound. Oh. Well, nice trade. Who cares? Nice trade. Nice touchdown. But I don't like him. He's got a Nike sponsorship. I'm not gonna root for that guy. I wear Adidas. Well, dude, like, you know, who cares? I don't care. I look at the market. I look at the participants. Hey, I look at the market. I look at the participants, and I look at kind of what kind of hands they got on them. Nice hands with the Bank of England. The Bank of England. $1 billion here, sir. Pleasure not doing business with you. Not doing business with you. Here's your $1 billion check, guy. The Bank of England? Nice move. Then he rolls over to what? He rolls over to who takes the change back? $600 million. Oh, you want to try with the Bank of Japan. I see. What Bank of Japan going to take $600 million back? Maybe for Britain. Who knows? It's a good storyline. Good storyline. Bravo. Distance yourself from all the mayhem and the problems in the market. Focus on the technicals. Don't miss a great story because, well, the brother on the football field is sponsored by Nike. I'm an Adidas man. I'm only an Adidas man. I don't care if he may go score 10 touchdowns in the next 10 minutes. But I'm gonna always say, he ain't no good player. Do what? He just scored 10 touchdowns in 10 minutes, right? By analogy only, so that you can appreciate. And am I any fan of anything other than the market? You bet I am not. And even more so, am I a fan of the market in the context of, you've shown up to our dinner party. Well, great. We're excited that you're here. The analogy is what? Well, you've shown up, and it's the dinner party for the 200 weekly moving average. I'll tell you what. You can, sir or ma'am, you can certainly sit wherever you choose. Great. I choose to go short. Well, since you've shown up to the dinner party, you'll of course be accommodated, no problem. Now the notion of the analogy is like, well, what if I showed up at the dinner party and I decided to go long? Someone who's really plugged into the markets, likely going to be on the right side of this question. But you're showing up to the dinner party. The host is very accommodating. I like in the context, listen up, guys. I like in the context of the Bank of England. You're the first one to the dinner party. Fantastic. On into the Soros, the $1 billion check getting written out. On into the Bank of Japan, $600 million being lost after the win. Over, up and above, the host saying, no problem, sit wherever you want. From England on into Japan. Oh, you want to play Asian banking. Okay, great. Okay. And the notion is this. Guys like him, they're known for shorting. True or false? True. Okay. Guy's known for he's got the Hail Mary route perfectly down, or he can strip the ball out of anybody's hands. Just watch him. He's on defense. He can strip the ball out of anybody's hands. Like an iron trap to get through the line, right? He's watch him. He's going to strip the ball. He does what he does all season long, right? So, but Soros is known for shorting. Darn it, he is. Who is the host of the dinner party? Hold on. What do you mean? Well, I mean, let's look at the NASDAQ. Okay. Soros is known for shorting. Whoosh. That's the NASDAQ. That's Bitcoin. That's the S&P. That's the Apple. That's the Tesla. That's the Coca-Cola. That's the Tesla. Actually, I had Taiwan Semiconductor. My apologies. Taiwan Semiconductor first, then Coca-Cola, then Tesla. Boom. Then the Amazon. Boom. Then the Microsoft. Boom. Then the Bitcoin. Oh, indeed, we're getting a little notion here. I like this. I like the hosts of the dinner party in the market. Look at that. Boom, Bitcoin. That's nice. Look at Solana. Whoa, Solana. It's relatively well known. Boom. Look at Cardano. Is relatively well known. Boom. Look at this, guys. Look at the Dogecoin. Look at Dogecoin. Boom. Look at Matic. Now, what is our understanding here? Boom. You see all this price action to the downside? Boom. Guys, what I like is the notion that you can participate in the markets along with these guys who are billion-dollar titans of the industry. And you wouldn't think that they would just show up to a party and the host would say, "Pleasure to have you here, sir. Pleasure to have you here, sir." As you would look at the S&P, as you would look at the Taiwan Semiconductor, as you would look at the NASDAQ, boom. As you would look at the Dow Jones, boom. Who's known for shorting? Who's the host of the dinner party? But the market's falling apart. Well, there are fundamental economic principles in play. Well, there's the Fed. Who's made money? Boom, on the Dow. Boom, on the NASDAQ. Boom, on the S&P. Who's made money? I don't know, guys. Does he have a Nike or an Adidas sponsorship? Brother's got an Adidas sponsorship. I only like Nike. I don't like him. What's happened? Cha-ching, S&P. Cha-ching, NASDAQ. Cha-ching, Dow Jones. Cha-ching, Apple. Cha-ching. You guys get this? Taiwan Semiconductor. Cha-ching, Coca-Cola. Boom, money. Tesla, boom, money. Amazon, boom, money. Microsoft, boom. Good money. Good money. You see, I'm not making any accusations. I'm enjoying the dinner party. Right? Whose party is this, man? I don't know. How do you get on the guest list for that kind of party? I guess these things just happen to work out sometimes, huh? It's nice to appreciate the notion that you being involved, and shout out to all the VIP, okay, as you're involved in the specifics here at the 200 Weekly. It's just an example, isn't it? But do you see, it's like, well, there's a dinner party, you show up, boom, boom. Now, the other commentary in terms of Soros or whoever it may be, I'm going to take a neutral position always in terms of the individual who's trading. What's the one requirement in VIP? The one requirement that you want to beat the market. All right? That's the one requirement in VIP, is that you want to beat the market. I'm going to save all the political jargon. I'm going to save all that for somebody who cares. I'm going to tell you, I am. I don't want to be distracted by it. I'm in the market. I'm busy identifying 24/7, 365 opportunities to increase my participation at higher probabilities. Okay? Sounds like I'm not ideological. Hey, isn't that nice? I'm not ideologically based in terms of the markets. Sounds like I'm unemotional. How are you doing on that? Can you see who's at the dinner party in the market as a trader? Can you see that that's one heck of a party, man, on the NASDAQ? Boom. Can you see, guys, I mean like a dinner party and that's it. Can you see on the Dow Jones? Boom. One heck of a party, man. Can you see the S&P? That's one heck of a one heck of a shindig in the backyard there. Boom. Yeah, you can, huh? You see an Apple? Boom. Apple, beautiful, huh? Taiwan Semiconductor, bam. This is macro stuff, guys. Boom, look at that. Number one chip maker in the world. Semiconductors, Taiwan Semiconductor, bam. I mean, look at this. That's a nice party. Boom, guys. Coca-Cola, it's a nice party. Tesla, beautiful, beautiful. Amazon, now, knowing what it's doing is half the battle. I don't want to get into anything, beyond the fact that people make money when the market goes up and people make money when the market goes down. Who makes money when the market goes down? Like, whose party is this, man? I mean, were we invited? Hold on. Were we invited? Because I got to ask, at this point, if there's any kind of exclusion, if there's any kind of exclusion going on here, I'm not going to be a part of it. In fact, I may report it. Oh, all right, huh? Go ahead and report that, huh? What do we do on the 200 weekly? On the 200 weekly, who invited you to the party? Man, this is the deal here. On the 200 weekly, you've been invited. Look at this. Boom, 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 boom. On Bitcoin. Big time. This party lasted for 86 days. Big time. This party lasted for like a week. Boom. But it was a beautiful opportunity to participate in a very recognized level in the market. Same notions technically. Occur and apply. I just wanted to get through that to kind of get you guys a little more unemotional in the market. Right? You know, if an investment has an ideology tied to it, so be it. If you choose to get emotional about that, you've lost. You're going to have some emotion guiding you to hold on to or to sell off into or sell off from a position. Really? You're going to beat the market? Huh? You're going to have your heart and soul involved in your day trading? Really? That's a shame. That's a real shame. It just is. Oh, I see. You heard something on the news. Oh, wow. You heard something on the news. Ooh, really? Wow. Congratulations, huh? That stuff's all true, right? You read it in a newspaper also? Or you belong to another group and that's what they told you? Oh, wow, huh? Impressive. Yeah, impressive. Nix. Negative. Negative Ghost Rider. The pattern is full. So, looking into the details, what are we going to be looking at? Maximum probabilities. Indeed. Okay? 72%. We're looking for this move right now on the 5-minute. What do we have? A potential blackjack. Potential blackjack. Am I a fan of anybody in the market? You better believe I am not. From Jim Cramer to George Soros to whoever wants to fly a kite around and say, follow me, I'm a fan of data. But I'm also rationally going to involve myself in the markets in terms of the participants. I'm going to rationally be right there. I think you're at a huge disadvantage if you're not able to rationally, without judgment. As soon as you go over into the emotional phase of, man, are you talking about that guy, huh? Yeah, I am. Process it, deal with it, understand from a trading perspective how they have, guys, involved themselves in the markets so that you might want to involve yourself in the markets. Boom, Dow Jones. Boom, NASDAQ. Boom, S&P. Boom, Apple. And I don't have this drawn out now. And I can, to the extent necessary. No problem. Apple, but boom to the downside. Taiwan Semiconductor, boom. Just put the pattern on. You got it, guys. In terms of Coca-Cola, Tesla, bam. Amazon, bam. Microsoft, bam. Can you learn anything from the discussion today? Possibly. And still remain unemotionally involved. I'd be excited if you could. I think it'd be a huge step forward. I mean, does it need to bother you that people just made truckloads of money? I know for a fact that if you've been paying attention to the technicals and you've been involving yourself with the right framework, i.e. 100 rounds, and been plugged in the back, sharpshooter style, right? Fast those guys, right? You hit the target every time. Do you see the guy? Like it's a spectacle, right? You would say, how'd the guy do that? He does that a lot, right? Learn to shoot. You learn to those 100 rounds. Quick. Draw. Kids. Learn where and it's nice, because on this, and in the context of the Florida discussion, the geography of where you're at, but you see a lot of geography of where we've been, right? You know the parties that typically have been paid well in the past. It's their signature, man. It's their signature. But he's sponsored by Nike, man. I'm an Adidas guy. I go sweat with Adidas on. Okay, man. Are you brother? He scored 10 touchdowns in 10 minutes. Well, ignore it if you want. In the context of the 5-minute right now. And I don't care, guys. Warren Buffett, I'm a fan of Warren Buffett's. Why? First of all, he has a great stash of jets. If you guys want to buy one, go for it. He has a great stash of jets. Second of all, he just does. And a good system in place around them. Hey, Berkshire Hathaway, hey. But I'm a fan of Berkshire Hathaway and Warren Buffett because he was the first one to tantalize me when I was younger about the notion of making 10 times your money. Do what? Hold on. Do what? 10 times my money? All right. He's got my attention. You guys know that. 10 times your money. Warren Buffett. Looking at that's his kind of party, huh? Well, that's Warren Buffett's kind of party, man. What does he got to do? You think about it, well, this is a pro-Soros rally here. I didn't sign up for this today. Well, make it a pro. You get emotional about it? Did you get emotional about it? Well, good. What about Warren Buffett? What about Warren Buffett? Well, he took Taiwan Semiconductor for a ride. Multi-billion-dollar deal, trade. He took Taiwan Semiconductor, the world's #1 semiconductor, for a ride. Oh, yeah. You find your time frame. You draw this out. You want to talk about constriction to talk about your constriction to your expansion. Warren Buffett just traded this. Literally in and out and bam. Adios. Where? Right here. It was a big trade. And flip the script to Warren Buffett. And your conceptions come into play, right? He's an older investor. He's Berkshire Hathaway, your variable analysis there. Don't look at anything. He just took Taiwan Semiconductor for a ride. Boom, to the upside. Minted cash on it. Hey, minted cash on it. You guys look for your blackjacks? Huh? You look for your double bottoms? Your pass-throughs? Boom, boom. Or is it constriction into an expansion? Taiwan Semiconductor, different time frame. You already know this without having to look at it. You already know you got a different time frame. Taiwan Semiconductor. Yep. Constriction into what? Your expansion. Yeah. Boom. See that interplay? You see that on Bitcoin? So what did Warren Buffett see? Here. A nice low price. He's with Adidas. I can deal with that. He's with Adidas. I'm an Adidas guy. I go work out and I'm knocking the punching bag with Adidas every day on. That's what I do. Warren Buffett, he's okay. Oh really? Buffett wants to pick up here. Boom. bottom rung, deep level support. Yeah, big time. Right? Some people want to write it down. They're known for it. That's the kind of party they like. They're known for it, right? The Soros crowd, huh? Well, some people want to pick it up low. You need both in the markets, huh? Big cats, both of those guys are playing together pretty well, don't you think? Indeed they are. They're making the cash here and making the cash here. Hey, that sounds like a market, huh? You buyers and sellers. Hey, that's nice. No bigger fan of Buffett than Soros than anybody. Boom. Just no bigger fan of either one. Unemotionally involved. As we look at Bitcoin on the right-hand side, and good morning, hope you guys are doing well. If you can't look at a trader without being compulsed into a political and ideological discussion, man, you've lost. You have lost the market already. If you can't get past an ideological and political discussion, that's just not VIP. It's just not. I could care not about the fancy stories I see in terms of what someone really is or what really did. Or I don't care. I don't care. I want to see what the price action is telling me. If I know who's participating and a reason why this type of party might have been thrown, well, such and such showed up to the party. Hey, okay, such and such showed up to the party. Boom. Such and such, someone else showed up to the party. Bam. Relevant? When there are amounts of money involved that can literally dictate the direction of the markets, you just might want to pay attention unemotionally, just as a factor there. We're seeing, as we talk about the New York, just a fact, huh? It's like, well, the wheels just fell off the train. The wheels just fell off the train. That's the news that's just in. I got news. The wheels are falling off the train. All right, great. Son, it's time to go get on the train. We got to go somewhere. Bravo, bravo, bravo. That ain't going to work around here, guys. It's just not going to work. Papa, the wheels are just falling off the train. Well, that's a good thing, son. We need to go get on it. It's time for us to go somewhere. Even the young kid is going to be like, but Papa, the wheels fall off the train. That's why I'm saying it's a perfect time for us to go get on it, son. We need to go somewhere. And Papa, we're not going to get anywhere, right? That's you in the market if you get emotional about the person, the people that are involved in massive amounts of capital inflows and outflows in the market. Just take it for what it's worth. The wheels have fallen off the market. Boom, right? Hey, it's back together and it's time to get going somewhere. Just take the good example. Here would be Taiwan Semiconductor, right? Wheels have fallen off the market for whatever reason, and we put some wheels back on it, and boom. Typical patterning in the markets. We've been talking a lot about this specific pattern, increased volatility. NASDAQ, increased volatility, expansion. S&P, increased volatility. Dow Jones. It's not easy, guys. And this is one of the biggest things I wanted to bring to you guys, and I'll let you go for the day here. But Venus, I hope you're doing well. Who else we got in there? Luke. What's up, my man Luke? What's up? Thank you, Venus. That's so nice. Very proud to be building with you. Hey, Luke, my man. Luke, what's up? What's up? Nice to see you, Luke. Luke's been VIP a while. Nice to see you. Luke, you saw that update on the computer system in the music and chats? Man, I just got word of this, that ThinkCentre Ultra P360 from Lenovo. Leave it to Lenovo. Leave it to Lenovo. Nice 8-monitor output. That's a gem, guys. That's nice. That's nice. Very nice. That's new information. And it doesn't come cheap in terms of the solution. It just doesn't come cheap, does it? I'd be interested to see, and it almost needs to be tested, their lower level solutions, how many monitors they can really drive. How quick are they really? Some of the other solutions, and I'll tell you, you're going to pay for that graphics card? Man, you're going to pay for it. You're just going to pay for it. You guys know, as you look for solutions in terms of your technology, you're going to pay for that graphics card. You just are. You guys know that, right? I think we're like, understanding that if you want this level of pro output, it's going to cost you to get in the game. You say, well, I don't want to be. I don't want to. It's like, I don't want to spend like 20 grand on I don't want to spend 20 grand on a desk. I just want to make $20,000 in the morning when I want to. Oh, I see. You don't want to spend 50 grand on a desk. No, I just want to sit down and make 50 grand whenever I want to. Oh, I see. Or you don't want to spend 40 or 50 grand on a desk or a room. Oh, but you want to show up and make a couple hundred grand whenever you want to. Hey, yeah, the market's yours, huh? It's your party, huh? 24/7. You earned it. Nah, we know a little bit better, right? 3-minute had a little bit lower level of support, right? Consolidating. We started off the day today talking about descending, paying attention to flat bottom level of support. Paying attention, looking for those expansions, increased volatility. It's just price action, but it is the commanding feature on the macro NASDAQ, macro S&P, macro Dow Jones. This is a great year. I mean, you guys, we're going to have to stack it up against a bull run. I'm going to tell you, we have to stack it up against a bull run because we have increasing volatility. It feels almost perfect, guys. In terms of looking at the Dow, we have, what are you off 7 or 8% on the Dow? If you want security in the market, clearly it appears to be around. If you're looking at buying at lower levels, selling at higher levels, what honestly becomes a little uncomfortable, you guys can you can agree or disagree, are straight line runs. Now they're nice as long as the trend line holds. Which trend line? Like which exact trend line are we going to be using here, boss? You guys know this. You look at the Dow. The straight line run, straight line run up. Okay. Straight line run up. Yeah, straight line run down. Boom. As we were to look at this last 300 to 400 days, it's been nice. It's been what? We have increasing price action. If you have stacked your cash heavy weight to the downside on even a basic principle of, guys, your Fibonacci's, if you've used a basic level of investing here, you've done okay. You've done well. Look at this low to high. I mean, this is first grade stuff. Low to high. What have you hit into? 50% retracement. The patience is the thing. We wake up, we want to make money now. You guys know that. We want to make money now. We want to make our 10 grand this morning. It bites people, doesn't it? It just bites people. Yesterday, let's talk about one thing yesterday. As we were to look at where are traders interested right now? We're interested down here. Amplitude carry down. We understand on the descending triangulation that we have high to low. We're going to draw down to show targets to the downside. Click 1, click 2 to the downside. We have targets to the downside. If we wanted targets to the upside, and we're going to start drawing up, click 1, click 2 to the point of breakout to the upside, right? He's just cool, isn't he? He just shows up like, what? Anyway, okay. Shout out to the TradingView team. We appreciate everything you're doing for us. In the background, they're working hard. Indeed. Now, in the context of the Florida discussion, right? Luke's up in Canada, right? He has all the room you want to go in any direction. It's like, I think you can walk around the planet almost, at least far enough to think you have in Canada. But I talk about Florida, it's a peninsula, right? In Florida, you can only go that way east so many times depending on where you're at. Or you got to go up and then you got to go that way. Or you got to go up and then that way, right? That barrier. Brought that up today, this morning, just as an idea. It's like, okay, are you stuck in you're in Hawaii and you got a great plan to walk to New York? Great. Oh, good. So that eagle eye, getting the bigger picture, as we talk about some more structured thought, right? Getting some bigger picture notions of where you're at right now, right? This level of support, eagle eye, zoom out. Let's go 1 hour. We go 77 minute. We'll stop off 77 minute. We'll stop off at the hourly, 4 hourly, 8 hourly, right? Okay. What's that larger geographical input that you need to zoom out and say, hold on, man, we're in Hawaii here. I know you guys are excited about walking and getting your land ticket stamped at every stop along the way to New York, right? Just the framework that you need to be in, even to the daily. Yep. Okay. Just take a look at the overall geography, right? as even we look at the 200 weekly, where are your boundaries at is the idea, the notion of the discussion. Where are your boundaries at? Do you have any kind of natural level boundaries here in play? And sometimes you'll say clearly, easily, we do or we don't. The 200 weekly, clearly we did. Boom. Right? Pre-existing prior resistance has made this somewhat easy, right? It's made it somewhat easy. It hasn't made it difficult. I just, that 200 weekly is such a huge boundary marker. We just want to pay attention to it. So, and those who have done well. So when we dig into the micro, the notion is this: as we dig into the micro, let's take a look at that micro. Here we are. All right. Pay attention. Be able to zoom in. Parse through the information. Yes, trade there on the 3-minute if you want to. Right. Looking at your divergences, looking at everything we got. We'll be spending a lot of time on divergences, guys. So eagle eye down, boom, into the 3-minute. Always able to scope back out. Boom. Where are we at? And that's a little bitty piece of price action on that 3-minute. That's why you want to eagle eyes down into it, like telescopically, satellite driven. Zoom. Literal eagle eye. Right? Yeah, down into. Ability to scope back out. Take a look at the whole landscape, right? As we were to scope out, what becomes relevant? What becomes relevant? Yeah. Potential operation, level of support. Potential operation, level of support. By operation, I mean orders are waiting at these levels, even as drastically angled as this is. Yes. Down into and through level of support. You guys got it. So when you eagle eye, I just mean that you're able to, like an eagle can catch a snake on the ground. Yeah, can catch a snake on the ground from a practical mile high. Yeah, ability to participate there if choose, need be, or yeah. Eagle has to decide. Oh, eagle gets to decide. I see. Eagle going to look at the 3 minutes. Eagle going to look at the 1 minute or the 30-second. Right? 30-second was different, huh? 30-second was what? Increasing level of support here. Descending level of resistance here. Bull pennant. Eagle looks at, decides to participate. If chooses to, eagle can see, an eagle can see. Right? All the way down from about a mile high. Go do your research in terms of how high. Yeah, go for it. Point from way on high, eagle looks down and sees a serpent. He decides to participate. And just glancing. Right? As you look at this, just glancing, just evaluating. Eagle eye into the different time frames. Into the different assets. Yeah, at some point. Yeah. You got it. Cool stuff. Right? As you would even look at your different assets. Ability to participate. Just eagle eyes. Need some different level of operations as you would look at different assets and different, as we would look at the different levels of guys, big deal. Yeah, but that's a good notion to bring to the foray today, to the mix today, as you would look at your different time frames. Where's that ideal focal? I see the opportunity that I want, says the eagle, and he decides to go down. Still evaluating on the way down? Would the eagle make kind of a predatory decision? Survival, huh? Survival based. Would the eagle make the decision? Would the eagle know its hit rate? Would the eagle care? Would the eagle know how the specific targets could move? Would it focus into a zone? Yeah, start to ask some good questions. Just the general notion, being able to dig into, evaluate your participation. That snake on the ground a mile below. Right? It's good stuff. As you would look at the ideal reason for you to get involved. Just think about it. You also think that satellite movie was awesome, huh? Eagle Eye. It was a cool movie, huh? What was his name? I forget his name, huh? The kid, huh? He showed up at his apartment. You guys remember that? That was nice, huh? He showed up at his apartment and they had stacked it. You guys watch that movie if you haven't seen it. And whatever it was. It was a computer. It was a governmental computer gone wrong, right? Complete impossibility. It was a governmental AI computer gone wrong. Everyone's talking about ChatGPT, huh? As I sit and wonder as to how ChatGPT or the militarized, who knows, equivalent of that could ever act up with me is like, oh, you walk into your front door, it's like, whoopsie daisy. You don't know, right? You ChatGPT, no problem. You say I have a problem with a whatever it may be. Yeah, like who knows? That's just funny. So, but Eagle Eye, assess the lower time frames, assess where your maximum probability is. As we do this, guys, the key to the name of the game is is going to be and look at this. This is a great example. Like Eagle Eye into this thing. It's a good challenge. You guys love this challenge, and you're going to incorporate your probabilities, guys, in terms of operational long level of support. We went last night. Was the coal of everything, was the end of it, was the expansion, yes, down to, and on a specific time frame, you guys can hunt that out as well if you like to. And looking at that, the expansion, what did it do? It went all the way down here. What was this? Expanding volatility. What do you want to be a part of? Increase volatility and price action in the markets. Especially if you can break that level of support, believe it or not, it is just an ideal place to play ball. It just is. What is the best part of Fire and Ice, our indicator? You are always prepared to buy where? Lower. Where on Fire and Ice does it ever have you buying higher? You don't. Especially on spot, 4 hourly, 8 hourly, daily. Hey, the spot traders on Fire and Ice caught the low of Bitcoin on the daily. That was a buy signal. I'll go ahead and buy some. Yes. So let's dig in the back. Let's get into this. Always be prepared with these patterns. I love when they do this. And if you like volatility, you're going to appreciate these patterns because, yes, and again, look at the top of your screen. S&P, the NASDAQ, literally the Dow Jones. You can say you don't need these patterns in your repertoire. That ain't going to fly around here, guys. That ain't going to fly around here. We know, because we trade them frequently enough, we know, like on the Dow, we're happy to push this out. It really doesn't matter to us. It really doesn't matter. And remember, the question is never, can I make money in the market? That's not the right question. That's not the right question. You could take a literal dollar and structure it in appropriately. You're going to catch a multiple to the downside of volatility kicks to the upside. You're going to make some money. If you're plugged in somehow, it mathematically becomes almost impossible, literally almost impossible to not make some money even on a dollar. The question becomes the guy who wants to make more money on every dollar. That's the problem. He wants to identify it right now. He wants to plug in. You guys know that. So we know because we trade these frequently enough and be like, well, I want to catch the drop. I want to catch the midline partial return, and then I want to catch. Start to work with your probabilities. Start to take that dollar and hold it so tight. No, I need to make so much more money on this $1. That's not the idea, guys. You're going to make some money. You participate in this, right? You're going to. But we just do know, for the purposes of this right now, in terms of expanding this, we just know because we trade enough of these, we're happy to expand this. No problem. Without a doubt. We're happy to give this some breathing room. No problem. And you guys know on the micro, building into that macro, it becomes highly relevant. So, seems like the Fed has got enough to bring the heat to the table. It seems like they do. I'll say this on Bitcoin. On Bitcoin, we like the lower prices. We always have, and we'll continue to like the lower prices. But once we get down there, I tell everybody about fear and greed. The biggest issue on fear and greed is what? On the fear, you're supposed to manage your fear well. You're supposed to dive into it a little bit, right? It's that fear at the bottom. It's the guys that just say, well, I could lose my position, but you shouldn't be in fear if you're not overexposed. If you're not overexposed, you shouldn't have any fear, right? It should be a normal part of the participation of the market. But when you want to overcreate the returns, I got 10,000. I want to make $1 million. You should be afraid. You should be very afraid. The market's going to eat your lunch 9 times out of 10. It just is, guys. I see the 10, and this is the 9 out of the 10 that I can confirm get their lunch eaten. So we have this specific pattern in play, and I'm going to tell you, we would love this pattern to do this. I'm telling you guys, we would love this pattern to do this and increase. And I tell you, we can choose all the other patterns in the world to talk about. You can read a literal caption in a book, and you'll know about all the other patterns in play. You just will. But this, I'm just telling you, ideally, we want this. That's what we ideally want. I want some more increased volatility along a level of support and a level of resistance. Can we get it? We're going to have to dig into the micro. But that's where the trade is. That's where the money is. Show me increase in volatility. If you show it to me on the 30-minute versus the I mean, come on though. Look at that. That'd be back to sub 20,000. What? It's increased volatility. If we can get it, we want it. You guys know that. The opportunity zone down in this level. Try and structure in terms of the max probabilities. Try and stay unemotional in the market. If I put on some boxing gloves with you, politically and ideologically, good. You here for the market, or you here to sow in politics? Get out. You want to sow in political? Get out. I don't have time for it. I just don't. I really, really don't, guys. I mean, I have time for the market. I love the market. Show me the guy that's sowing in the political, and he's in the market, and put him up against me. Because I'm not, which means I spend more time in the market, which means I'm going to beat the guy who's sowing the political 10 times out of 10. Not 9 times out of 10. I'm going to beat him 10 times out of 10. And if he doesn't like that, then the guy that's sowing the political and feeding the ideology and the political, case in proof and point, he's losing. He's losing in the market. He's too emotional about the market, guys. Find ways to distance yourself and only focus in on the markets. Yes. Challenge. We'll beat those guys every time. This is London with VIP Trader and Bitcoin Spike. Excited to come to you. And the market's cooling off. You have that macro. We had some sizzling hot, boiling oil in with the markets today. They were doing well, and then they have sputtered out. The Feds have got the ammunition. They want it. They have got a trove of it. You guys know that. Let's dig into the patterns. Let's trade, guys. Fire and Ice doing extremely well. Nice pickup here. Boom. Slingshot. Nice analogy yesterday. You guys got that analogy yesterday? It was nice. In terms of on the football field, go out for the touchdown pass. And what was it? Well, yeah. Little bit of congestion on the football field. Boom, 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 boom. Nicely done. We'll talk to you guys soon. We'll be in the back. Joined today from a desktop computer. This is London with Bitcoin Spike and VIP Trader. Remember, former hedge fund owner, private, non-SEC, not financial advice. We'll talk to you soon. Thanks, guys. Take care. Bye-bye.